Okay, good morning everyone, and today we're going to start with our lesson in accounting. We're going to start from the beginning, the meaning of accounting, the um, the importance of accounting to business, and who are the interested parties or the stakeholders, and why is it that they're interested in this in the business, the importance of accounting, and we're going to tackle also the different steps or the process in accounting before we can produce our financial records, which are the results of accounting. The importance of financial records, and of course, the different process in which students find it very difficult sometimes if they are not guided very well. So we're going to start from the meaning of accounting. So what is accounting? Accounting is the process of recording financial transactions pertaining to a business. The accounting process includes summarizing. We're going to summarize all the different account titles. Analyze. We're going to determine whether these accounts are either increasing, static, or decreasing, and that bloody analysis of the effect of the different economic events on the business equation, because we have the so-called business equation that we are going to rely on our analysis. And of course, at the end of the period, with all those records that we have gathered during the period, we are now ready to make our financial statements, which are the records that are used by the decision makers in whether they're going to continue the business or going to stop, or they will know what is now the financial position of the business, how much are the assets, the liabilities, and the claim of the owner. So these are very important in determining for decision making. So the financial statement used in accounting are a concise summary of financial transactions over an accounting period. So accounting period I use in order to stop for a while and recount or review what is happening during the past period. And we're going to summarize the company's operations, financial positions, and cash flows. So these three here, you can find this information on the financial statements that we're going to prepare at the later part of the or in the forthcoming videos also. We're going to tackle all this income statement, balance sheet, and the cash flows. So how does accounting works? Accounting is one of the key functions for almost any business. If you're going to have business, you're going to ask what happened to my business the past period. It may be handled by a bookkeeper or an accountant at a small firm, or by sizable finance department with dozens of employees at larger companies. So the people that you're going to hire in order to do this accounting will depend upon the size and the complexity of your systems. The reports generated by various streams of accounting, such as cost accounting and managerial accounting, are invaluable in helping management make informed business decisions. So the topic that we're going to discuss, or the course that we're going to discuss, are just very basic, but we have a higher accounting like cost accounting, managerial accounting, which also has their own purpose. So these two streams of accounting are used by finance people or the CEO or anybody who is heading a department or a company for decision making. So in higher accounting, we're going to have this one. But in our course here, we're just going to start from the very basic. So you see that we are making these records for decision making. So before the end of the video, we're going to show you, familiarize with the different reports that we are going to produce after the end or before the end of this course. We may able to produce all these financial statements which we could use for decision making. Okay, so we are now on the different interested parties to the business. So why are these people interested? What will happen to the business? First one are the owners, of course. So the owner is interested on what will happen to the business because, of course, his investment. If he is profiting, if he was able to grow or the business was able to grow after a year, or what happened to his liabilities? Is it growing also? And how much is his claim already on the business? So in other words, the result of operations is very interested about that and his growth. And for the employees, of course, they're interested in the business or the financial statements because employees are a stakeholder or they are stakeholders in the business. If they wanted to ask for a raise, the basis there is the growth, and they can see this information in the records. What about the investors? Of course, they're the return of their money. The creditors, they're interested in the business because they wanted to know if this business is qualified or it has the ability to pay liabilities. And they will be very interested also if the business is good. They will be interested because they can earn or they can profit from that transactions or from that agreement if in case. The government, of course, is very obvious. Taxes. The growth of the business is very good or helps in the economy because it will bring more inflows to the government for taxes, and the government will be able to serve the constituents. They will be able to make or to give more services. And the community, in the form of goods and services, there will be an improvement. Employment, of course. If there are businesses around, there will be less unemployment because everybody will be working and be hired by the different business. Okay. So the records, the financial records that we're going to produce out from accounting will be very important because they will be the basis of decision making. So what are the different records that we can produce or they can produce by accounting? For the income statement, we can see here the results of operation, whether it's gaining or not. For the balance sheet, after the preparation of the income statement, we can prepare the balance sheet. And here in the balance sheet, you can see if the business is growing because assets will be increased or will increase from compared to the first day of operation. Liabilities, how much now is our liabilities? For decision making, how are we going to pay them? And of course, there are some analysis comparing assets and liabilities. And of course, the owner's equity or claim. The owner will be interested to know how much now is his equity, his part of the business. Uh, the owner will also be able to know if he can now withdraw some portion of his capital and convert that to personal transactions. So the owner is very interested. For the cash flow, it is also very important because one of the objectives in doing business is liquidity. Liquidity means that we can pay off liabilities as they are demandable at that very moment. So if we don't have any liquidity, we'll not be able to pay off our obligations that are already due. And then What are the process in accounting? So this is where we're going to start with our bloody discussion, because this is very procedural, and as a teacher for 26 years, this is the part where students will be having a hard time. So we start with journalize or journalization or the journal paper. This journal record is where we're going to start. And in my teaching career, I always spend so much time in the journal paper, because if you commit errors in the journal, these errors will be forwarded to your postings or your trial balance, to your financial statements. And although we have the adjustments, some of these might not be seen by the auditor, by the people working on the records. So it is important from the very start that in the journalization, we can see or we can correct whatever errors that we have. That is very important. So I have uploaded a lot of videos about journals and how important it is. So at the end of the period, we will now prepare our financial statements, and then we make some adjustments because of the methods in recording. We have two kinds of methods for the recording of the expenses and income. That is the asset method and the expense method. So there is a need to separate these two kinds of accounts, the asset and the expense accounts. So we need to adjust so that we can come up with the accurate figures or records. And then, if everything is all right according to what we have reviewed, so we can now close our temporary accounts, which are the revenue accounts or the expense accounts, and then we can get now the post-closing balances. That is where we can already rely. These are the accounts or these are the figures that we're going to start off the next uh, the next business year. So I hope that you're going to follow this video and this channel for more information on accounting. Thank you.